Well, repayments are set to resume in October after a 3-year pandemic pause. But here to discuss the impact of the Supreme Court's decision, along with some advice for borrowers, Lauren Sprung, certified financial planner and author of Financial Planning Made Personal. We appreciate you being here and talking about the steps that people should be taking, because you got 3 months is the countdown to start paying these back. What about people that didn't save up any money for this and they're not ready to make these payments? What happens to them?
Two things. One is start getting prepared now. Start taking a look at your income and your expenses. And if you have enough cash flow when all's said and done to cover your loan payments, great. If you don't, then it's going to be key to take a look at those expenses, see what you might be able to cut, eliminate, or reduce. I've been successful in reducing some of the vendors that we work with at my house, so you have to try to do that. The other thing that you have going for you is you have this on-ramp program where they are not going to ding your credit if you're late on any payments starting October 1 through September of next year. So you'll have a little bit more time than the 3 months to get prepared, but be ready because the payments are coming.
Look, I think if people read your book, they would be smart and they would have probably saved up some of the money that they weren't spending on their student loans. I just want to get like a big picture, a general picture. How many people do you think actually did that during these past 3 years? How many people actually saved up that money instead of spending it on other things?
Probably a very small fraction, because I think a lot of people were out there under the understanding or thought process that their $20,000 was going to get eliminated. And I think many others weren't even making payments, even though they were at 0%. So they could have been making payments, but at this late date, now it's time to, get yourself in gear and make sure you're prepared for that October 1st start date.
And pony up. Also, a lot of folks struggling as well. Let's talk about, without the help of the federal government, how can a borrower get rid of student loan debt?
It's very difficult. I mean, you have to start looking at other options. There might be ways, if they are federal loans that would have been forgiven, you might be able to go to the private market. But then keep in mind, if any of the administration's opportunities that they're trying to take advantage of today ends up coming to fruition, those loans are not going to be counted because they're no longer federal obligations. So you have to be careful. You have to look at all your options and look at what works best for you. Know all the pros and cons before diving in and making a decision.
We were talking during the commercial break, and you mentioned this is a bigger problem. Let's discuss that briefly.
Yeah, so I think, this is a $2 trillion problem.
That's a lot of money.
$2 trillion. This was supposed to eliminate about $400 billion, so about 20% of that problem. But we have a bigger issue that needs to be solved, and I think there are three really constituents that are leading to this problem. One are the schools. They are huge marketers. They're getting people to go into their schools maybe at higher price points than they want or should, and staying longer. I think the average student takes 5 years to finish a college education.
Trying to figure it all out.
That's a big add-on to your expense. Two is the federal government and private lenders. Very easy to get money to borrow for school. And, if you're a business and you want to borrow money, you have to put a business plan together. But there's really not that in place for student loans. And three, parents and students themselves. I think you have to, when going through the college decision-making process, look at that return on investment. Understand why you're going to that school and what you're getting out of it. Many times families end up spending more time, deciding or evaluating a car or home purchase than they do their college education.
I thought you would have talked about the interest rate, because that's a huge problem.
The interest rate is a huge problem. It wasn't a problem for the last 15 years or so, but it's also gone up significantly. It was relatively low until, the pandemic interest rates started rising. That's been a huge impact also. And that's what's going to really hurt borrowers, because not only are they going to be impacted by the fact that these payments are starting, but it could potentially be at much higher rates as well.
Look, as much blame as we'd like to put on some of these educational, institutions for not maybe informing kids about how they can save up better, you have to do this on your own, which is where your book kind of steps in to help people with that.
Yeah, financial planning is really personal, and it's very important. And I talk about my own journey in the book about saving for my own kids' educations. I have a 20 and a 17-year-old. I started before my oldest son was even born saving for college. And now that's an anomaly, but these are the things that you have to plan for, and you have to plan for what's right for you personally.
Where can people find out more of your book? Maybe can contact you, getting their finances in order.
Thank you so much. So the book can be found at financialplanningmadepersonal.com, as well as all of our contact information to reach out to us at Mitlin Financial.
Now, you posed this question on your book. What did you do today that brought you joy? What did you do today that brought you
Spending
joy?
time with you all. This has been a joyful start to my Wednesday.
That is the
I had to think about that for a second.
Best
but
answer.
yes.
Thanks so
Thank
much
you.
for being here. We
Thank
appreciate
you.
it. All right, coming